This presentation is all about the flat rate scheme, and it's going to affect mainly service businesses. And the relevancy is if you are a service business, you're using the flat rate scheme or you're thinking about it, and you are significantly service based, this will almost certainly affect you. So let's get started. My name is Gordon De Silva. As well as being a multi-award winning chartered accountant, I'm also the creator of the Profit Multiplier program, which helps businesses double their profits in less time than otherwise it might take. So, what is the subject matter today? We're going to be talking today about the flat rate scheme for VAT. Now, my clients who've been using the flat rate scheme, on my advice, to be fair, are now going to lose the cash benefit that they received from running the flat rate scheme if they qualified. Those of you who are my clients and have taken my advice and received a big cash benefit from using the VAT flat rate scheme will begin to lose that cash benefit. And this change is coming in from April 2017. It was announced in the autumn statement, and it's going to start biting in a couple of weeks' time, with April 2017 being the relevant date. 1st of April is in fact the date. Those of you who have been benefiting would have been paying VAT at a flat rate known as the FRS, the flat rate scheme. The flat rate scheme is used by numerous small businesses to simplify their VAT reporting, but more than simplify their VAT reporting, they've been using it to save lots of money and to bank a whole lump of VAT that otherwise would have gone to HMRC. In fact, that is out of every 100 clients we have on the flat rate scheme, 90 of them would be using it for the cash benefit. And if you are one of my clients, then you will need to understand that that benefit is now going to end from the 1st of April. So there are lots of businesses like you who gain an advantage from using the scheme, but this advantage will be cut back so significantly that it is going to be almost useless to you. The flat rate scheme will continue, but only for businesses who properly qualify, and service businesses are not going to find it economical to use at all. So let's look at the cash advantage. When using the flat rate scheme, the business has to ignore VAT incurred on purchases when reporting its VAT payable each quarter. And the exception to this is where it buys capital items in one go, costing over £2,000 or more. Now, I'm not going to go into too much detail on that because it's all coming to an end, so there's not much point. But if you bought a whole load of computer equipment and in over 3 months, and one bill came to £1,900 and the other bill came to £500, you would not qualify. But if you bought the whole lot together and it cost £2,400, it would. Using the flat rate scheme, the trader, the business, the service sector would multiply their gross turnover. That means the turnover including VAT. We don't use that very often, but in this case it is relevant. The turnover including VAT is going to be charged at normal rates, right? So you just say you sell something, you still use the normal rate to charge it, and that will be, so for example, if you charge £1,000, you'll add £200 of VAT at the current normal rates. But what you then do is you take that £1,200 and you multiply it by the flat rate scheme percentage set for your particular trade sector, right? Now that's all nice and clear, and you've been using this for a while. If you haven't started using it, then before you start, we'll give you advice on whether it makes sense for you or not by doing some calculations with you. So this flat rate percentage is supposed to take account of all the amounts of VAT that you're likely to incur on business expenses. So what it started off being is HMRC was going to understand that you were going to pay, telephone bills, accountants' fees, motor costs, and all that sort of stuff. And as a result, you'd be claiming a whole lot of VAT and doing a lot of paperwork. But that's not going to, and that in itself would have then reduced your VAT bill, right? And what they're saying is these percentages now are certainly not helping you do that. It's over helping you. They're being too generous. And as you and I both know, the company is in big trouble, and they're trying to claw back as much tax as they can. So let's look at what these rates have been, and see how they might affect you. If you are an accountant or in legal services, obviously we're accountants, and it doesn't affect us because we're too big to be on the cash accounting scheme. But if you are a small accountant, and some of our coaching clients who we mentor as accountants will be in this boat, and their legal services like solicitors and things, you would multiply this turnover, including VAT, by 14.5%. If you are a journalist or an entertaining, you would multiply by 12.5%. If you're in computing or IT consultancy, 14.5%. If you were in business services not listed elsewhere, 12%. If you're an estate agent or property management company, 12%. If you're a management consultant, 14%. So you can see, compared to the 20% you were paying, there was a margin. If you're paying 14% of the 120, the 120%, the total plus VAT, you were still banking some money, and the potential. Some clients were saving £1,000, some clients were saving £5,000. So there was savings to be made. And if the business now incurs relatively few expenses, it's not going to qualify. And so if you're a service business and you operate in one of these sectors I've talked about, with a relatively low FRS percentage, this is the 14.5, 12.5, 14.5, and so on, it will pay out, you will normally pay out less VAT to HMRC. And some businesses actually registered for VAT under our advice as well, that would normally be outside the scheme because the VAT threshold was below 83,000. Now it's 85 in 2017. And they would actually register for VAT voluntarily before their turnover reached the VAT registration limit, so that they could use the FRS scheme and bank the cash advantage. Now, why wouldn't you? Tax law is there and it's there to be used. So why wouldn't you use it, right? It makes sense. But what the revenue have picked up on is there has been an abuse of FRS. Now, I don't call it an abuse. They've set up the system. We are using the system. We're not abusing it. We're using it. But every time you get any tax advantage from thinking, they call it abuse, and it's just ridiculous. But that's where we are as a country. So what the government believes is that small businesses have been abusing FRS. We believe we've been using it, and they agree it's been used as the law intended. But they call it now abuse. And so it's changing the terms of how the scheme works to make it much less attractive to use, and as a result to reduce the cash advantage that was enjoyed by many of our clients and other service-related businesses around the UK who are getting the same good quality advice that we were giving our clients. From 1st of April 17 then, a business will be required to use a new FRS percentage of 16.5% if it is a low-cost trader. Now, 16.5% when VAT is 20% would still sound like a good idea, but it isn't. The reason it isn't is because the 16.5% is charged on the gross value of your sales. You remember, the total sales plus the VAT. So you're charging it on 120%, okay? And as a result, the equivalent amount of VAT you're actually paying is 19.8% of the net, which is virtually 20%, isn't it? And so, when you start paying accountancy fees and mobile phone fees and maybe some rental services and so on, you can begin to see quite clearly that the flat rate scheme is definitely not going to be in your advantage. And there'll be no value in it. So let's look at what defines a low-cost trader. This is a business whose expenditure on goods, not services, on goods is less than 2% of its gross turnover. Or if it's more than 2% of its turnover, the amount spent on goods is less than £1,000 per year. So this catches the really small traders, right? And any expenditure on, for example, capital items, motor expenses, food or drink for consumption by the business is completely ignored when working out the 2% or the £1,000 threshold. So any amount you spend on services or equipment like car parts or computers or food and drink that you might use in the business for your team, for example, will be completely ignored when working out this 2% on the £1,000. This emphasis on goods will discriminate against service businesses who incur VAT on services, such as businesses who incur services such as rent. We've got a whole lot of clients who rent premises. There's businesses who incur software licenses. We've got clients who rent quite a high value of software licenses. We do, for example, we hire a lot of software for running our business and running the accounts and running the technology, and all of that will be ignored. IT support, ignored. Digital journals, ignored. Subcontractors, ignored. Telecoms, telephone bills, mobile phone bills, ignored, right? So you can begin to see that everything that a service business would incur is largely being excluded from this calculation. So in VAT terms, just remember a service is anything which is intangible or where the cost relates to a tangible asset. So for example, just say you hire a van, then that is also intangible, right? That's a service. You're hiring, it's the hiring of the van, not the van itself, that determines its tangibility, and the hiring is a service. So let's look now at action that you may want to take. The first thing you have to do is, of course, review your use of the FRS system. Now, if you are a client of ours, we're in the process of doing that, and we'll give you some information in the next few days on what action you should take. The chances are that you will have to come out of the FRS scheme. Okay, you will almost certainly have to come out of the FRS scheme. So please be aware that from now on, you're going to have to give us all the information on your accounts. Some of our clients have been taking the easy way out and just sending out us their sales every quarter to do their hands-free, hassle-free bookkeeping system. Unfortunately, now we are going to need bank statements and a list of all the expenses, even though it's not the year end, because the VAT will demand it. So please keep that in mind. Businesses who are trading under the VAT threshold of £83,000 or now £85,000 that may still want to now deregister for VAT with effect from 1st April 17, because they're not going to get any advantage at all. And of course, businesses who are trading over that threshold, as I said, may need to withdraw from FRS. So please bear that in mind. Some clients have said, should I just invoice in March for services that I know I'm going to perform in April? And the answer is no, because that would be avoidance, and we know the government's view on avoidance. In fact, they have specifically picked up this point and said that will be disallowed, and if you get caught, you will be penalized and interest charged on any VAT that you've paid wrongly. So please don't be tempted to early invoice for services. Remember, for VAT, typically the date of VAT is the earlier of receipt of the money, delivery of the service, or receipt of or the raising of the invoice. So whichever is the earlier of the three is typically, but in this case, you can't raise an invoice early if you are not going to deliver the service until the following month, because for the FRS purpose. Okay, so that's it for this briefing. Hopefully it doesn't affect you too much, and the windfall you've been having for the last 7 or 8 years of been working with us, maybe £2,000 a year. That's £16,000 in your pocket that you haven't had to pay corporation tax on. Very good for you. Well done. Congratulations on taking the advice. We'll look for all sorts of ideas, and we'll continue to look for ideas that help you pay less tax, but this particular one has ended. So remember, if you have any questions on this, give us a call. And until we speak, goodbye, and thank you for listening. My name is Gordon De Silva. Please share this briefing with other business owners that you know. I am, of course, as you know, a business mentor and coach and consultant, and the inventor of the Profit Multiplier program. And of course, I've also written a book, an Amazon international best-selling book called Profit Propeller, which is available right now for a knockdown sum of 99p. So save yourself a fiver or so and get it now for 99p on Amazon. Just look up Profit Propeller and you should be able to find it. So that's me, Gordon De Silva, a multi-award winning chartered accountant. Signing off. Here's our contact details. And thank you for sharing this briefing with others. And don't forget, if you're watching it on YouTube or something, please click like. Please send us a thank you if you found this briefing useful, and tell us what you think. Take care of yourself. Look forward to speaking to you soon. Goodbye.